Hello, investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. Well, this has been one crazy week, and I could even back that up a little bit and say this has been one crazy month. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, and if you can see my cursor right here, that was the beginning of the first trading day of December, and we are down almost 3,600 points from that high. Now, if you've been following along with my weekly market reports, this should be no surprise at all, because I did forecast a 3,000 to 4,000 point pullback in the markets, and we've already had that, and I'm now going to extend that into the month of January. But before I give you my long-term forecast, let me give you my forecast for next week. This diagonal line right here is a trend line that I really talked quite a bit about. And 2 weeks ago, I asked everyone to share the video because I said this was a major breakdown in that trend line. And then I also talked about what I label as the kiss of death. We have not seen that yet. And so what that means is once a trend line has been broken, like we see here, most of the time you will see a pullback to the trend line in an effort to test it and maybe even get back on track above it. However, if that trend line fails, or if the price fails to stay over that trend line and we start to turn lower, that is the kiss of death. And so if you have any long positions moving forward after that failure has occurred, I strongly recommend you rethink your risk management plan and get to something that'll make you more comfortable, particularly cash. Now, let's move forward with my forecast for next week. If you look very closely, you'll see that I said we would pull back this week, and I was expecting a bounce midweek. We had the pullback, and we continued lower. Now, what does that mean for next week? Well, if you look very carefully, today, Friday, the 21st, as I record this, we have a lower volume day after 9 consecutive red candles. This is called a stale red light. You could also see the stochastics down here is at a low, being oversold, and it looks as though it's going to start to move up from this level. Now, in the past, I have given some guarantees with regard to my forecasts, and I can tell you that there is a 99.9% chance that we are going to rally next week. It's a shortened trading week. We have Christmas on Tuesday. We have a half a day for Christmas Eve, and there's a lot of people on vacation. I think we're going to see a pretty significant bounce as we move back up to close out the year. Now, there's an old saying, and I've said this many times before, I'll say it again: as January goes, so goes the year. If we start off January with a positive rally, but end it with a lower price, then there's a good chance that 2019 will be a down year. If I back up a little bit on the Dow chart here, and you look at the weekly chart, you can see that if we have that kiss of death and fail to get back over that trend line, we could drop to Dow 20,000, which again is another 2,500 points lower than where we are right now. Looking at the stochastics, this is the lowest stochastic reading we've had in 3 years. And so I think the stochastic on the weekly chart is going to start moving up, giving us that chance to maybe participate in a short-term bounce. But again, all eyes are going to be in this area right here as we retest that trend line. So keep that in mind. Please be sure to share this video with everyone you know who's at least participating in the market, and particularly your family members, because if they are following the advice of anyone who's telling them to buy, they could wind up getting themselves into some financial trouble. So we don't want to see that. It's all about risk management in 2019. Now, as we look at the S&P 500, this is the ETF for the S&P 500 right there. It's SPY. And I go back to my daily chart, you're going to see that I did forecast a lower market early in the week, and I was expecting that bounce. But once again, we have a stale red light right here. I'm going to erase all lines, and particularly the prior forecast lines, because they were spot on. And I'm going to, again, forecast that we're going to see a bounce in the S&P 500. Again, stochastics is at an oversold condition. We have a very wide divergence from that 20-period moving average, the longest that we've had all year. I think we're going to bounce, go higher. It's going to be a relief for a lot of people that have been sweating it out this week and this month. And we're going to see that my target is the end of that line, which is 255 on the SPY. Now, let me just hop to the volatility index, because the volatility index was a rally, a big rally, and we see a long stretch of green candles right here. We far surpassed the target that I had for the VIX. I said we'd wind up retesting these highs. We blew through that, and now the stochastic on the VIX is starting to turn lower. I'm going to say that the stochastic is going to cross with a sell signal right there. That will most likely bring the volatility index back down to the former resistance, which will now be support. That's a role reversal. And in the process, as the volatility index pulls back, that's going to add strength to the S&P 500. So again, they're inversely related right there. Now, if we go to a more broad-based index, which is a Russell 2000, look at that stretch of red. I said we would go lower. We did that. We hit our target and completely blew through it. The Russell 2000, as I zoom in here, the stochastic is starting to head up. I believe that we're going to get a cross, which is a buy signal, which in turn is going to cause the Russell 2000 to rally as well. I'm just going to get rid of that little tick mark and simply move that over. We're going to get the bounce. Again, that's a 99.9% chance that we're going to rally in the Russell 2000 as well. We see the wide divergence from that 20-period moving average. And I think a retracement here to the moving average is very much in order. So keep your hats on for next week and keep your eye on the market. Remember, I'm going to be reporting each and every week as I usually do, and I'm going to be more focused on the downside than the upside, because I want to make sure people are using good risk management discipline to move forward in 2019. Now, finally, the Qs. This is the NASDAQ market known as the power shares. See, we blew through support. I said we would go to it and test it. We did that. We went right to the low from back here in April. We went down, and you see this big spike in volume. I think next week we're going to see a drop in volume, again, because of the shortened trading week. That will actually give us some relief from the selling pressure, and I think we're going to rally right back up to that former support, which is going to act as resistance right there. So keep your eyes on the Qs. The tech sector has been under a lot of pressure. This too has had 9 consecutive red candles in a row, with all of the trading days in December being red except for these 2 green candles. So 12 out of the 14 trading days for the NASDAQ as well have been negative. I think it's time that we see a little bit of a rally. We're long overdue for that. I think there's a lot of fear built into the market based on what we're hearing in Washington. I think the Fed is a little confused. I didn't see any kind of a bounce in the market today based on some of the news that was coming out from the Fed. You'll most likely read about this over the weekend, where the Fed is now second-guessing their rate hikes. There's even some speculation that they're going to lower rates, which could give us some relief here as well. And I think the Fed is really overdone it with the rate hikes, and it wouldn't be out of the question to see a break from that, or, like I said, lower rates in the future, in the near future. So that's it. For those celebrating Christmas, have a very, very Merry Christmas. And we will have one more market report in 2018, and then we start off the fresh 2019 year with a lot of good things coming from the market, guys. So stay tuned to our website, and I look forward to presenting along the way. So have a good one. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.